Alright everyone, welcome back to the channel for another Bitcoin update. So, we've had the perfect storm of bullish news and bullish continuation over in the market since my last update on Bitcoin, pump before the dump. We recorded this on Saturday when the price was sitting at 21,000 and we highlighted the most logical path for Bitcoin to take. This was a move up to as high as 23,200 before subsequently coming back down and more or less being range bound until the 27th to the 28th of July. We've got about 9 or 10 days left until, in my opinion, we're about to witness a major capitulation for the cryptocurrency market. So I'll explain that towards the latter half of this video. At the start of this video, I'm going to talk about what Bitcoin still has going bullish for it, what this news was, what is carrying Bitcoin's price right now, and then towards the latter half of the video, I will shift over to all the bearish signals, which are getting stronger and stronger, more and more prominent. We're switching from short to mid-term bearish indicators over to higher time frame bearish indicators. So start off with the bullish news, then we'll go on to the bearish news. Let's jump right into this. So jumping into the news, as you can see, the US dollar is currently retreating from its 20-year high as aggressive rate hike bets drop. This news is in correlation to the next FOMC meeting, where in the next 9 days, the Fed is going to be discussing monetary policy. Are they going to once again be tightening it and increasing the interest rates? That is personally what I believe. I think we're going to have a 100 basis point increase. However, some people, economists, and according to investor.com, a lot of people are starting to think that interest rates are going to subside, which would obviously be bullish for the markets. I'm in disagreement with this, but nonetheless, let's move on. This is definitely a much more bullish metric. This is the US investor sentiment in terms of how bullish people are on a percentage basis. Now, in the past 7 days, the US investor sentiment has gone from a conservative 19.38 up to a modest 26.89%. So this was definitely a very large increase in investor sentiment. If we do look at the level chart, you can see this nice leg to the upside in only 7 days with investor confidence returning. And I believe this is coming in tandem with the US dollar dropping and people expecting a rate hike drop. Now, the dollar really hasn't dropped too much. It's been going down for 2 days. It's only started a downtrend on the 1 daily for the Heikenashis. Normally the Heikenashis call this a lot easier, so I imagine we will be moving to the downside for the dollar, at least in the short term, up until the next FOMC meeting. So there is the bullish news. These are some of the reasons why Bitcoin and the greater markets have been moving to the upside. You can see the stock market is also moving up. Stock market is about to open its pre-market bullish, and the dollar is already open and it's starting to move down. So that is the news. Let's jump into the charts. Once again, we'll first talk about the bullish technicals, and then we'll move over to why I think that we're coming up to the apex of this fake out. Alright, jumping into the bullish technicals, starting off with the reason why we were short-term bullish in our last video. This is the fact that we have cleared the most important range of our volume profiles over on the VPVR. This was round about 21,150. As soon as we cleared this, we were basically clear for another leg to the upside. So there's really not a lot of resistance up until this point of control up here around about 28,300. to as high as 29 to 30,000. This is really the next area where a ton of volume is traded, and technically if we were only looking at the VPVR, it'd be logical to have a leg back to the upside over here. However, I think looking at everything in a giant picture, which is probably the best way to do things, I don't think that would be the case. I don't personally think there's enough money in the economy at this moment in time to push the price of Bitcoin up to 28,000, 29,000. I still think people are struggling, interest rates are going up, cost of living is going up. I just don't see how Bitcoin could move all the way up to the upside over here. But nonetheless, we have cleared the most major area of support over on the VPVR. The daily time frame, the squeeze momentum indicator, has started to move to the upside. The volume, I will also be flipping this on a bearish stance towards the latter half of the video, but we've got an okay increase in volume today. I mean, we've got an increase over the past 3 days. However, you know, once again, we are still in a kind of downtrending position for the bullish volume, so definitely take that into consideration. Once again, the dollar is moving to the downside. It has been fairly overextended for a while. Its squeeze momentum indicator is heading to the downside, and even on the Heikenashis candles, it started to head to the downside. The price action as well for daily Heikenashis correlating to the squeeze mom, they're both moving to the downside. So this is a good indicator that the dollar is likely to see a tiny bit more continuation to the downside up until our next FOMC meeting. Looking at the SPY, the stock market is about to gap up and open bullish. Normally we get continuation in the direction of the gaps, just like we had continuation from this gap over here. So I would definitely be expecting for the stock market to take another leg to the upside and potentially solidify another lower high in the short term, which will once again allow the markets to move up a little bit more in the short term. So this is a bearish chart, so we won't have anything to say over here. Over on this chart, this is specifically correlating to the amount of volume that's coming in. If we look at what's going on here, 144,000 has come in over on Bybit in the past 24 hours, which is also definitely a bullish indicator. So these technicals that we've mentioned so far are the reasons why the price of Bitcoin is moving up. Also correlate that to the fact that we discussed the news. The investor sentiment is up, the dollar's going down as aggressive rate hike bets drop. This is basically why we're seeing what is, in my opinion, a fake out. Now, let's jump into the bearish technicals. So starting off with the bearish technicals with the same chart we were looking at previously, what you can actually see is we're currently forming, there's two different ways you can argue this, because this hasn't been playing out for too long. So you can say, hey, you know, this is a massive bear flag that we are currently residing in at this moment in time, and I would definitely agree with that. However, I also do believe that we are kind of in no man's land and doomed to bounce around for the next 9 to 10 days until the FOMC and GDP results come out. So in my opinion, just like I highlighted over in this video, you can see it in the thumbnail what I was predicting from 21,000. I think moves like this up to higher price targets, back down, and then coming into the 27th to the 28th. I think this is where we're going to snap back to reality. So until this date, I would definitely expect a crab market, a lot of choppiness, potentially something like this before we do head to the downside and then solidify our bear market low. This is still absolutely what I see coming into fruition. I've said this before in my last video. You know what I need to see to backpedal. I need to see the Fed going against what they've been doing. I need to see the Fed stop raising the interest rates, and also the GDP results. That needs to be bullish. We need to have positive GDP, otherwise we're going to be in a recession. So within the next 9 to 10 days, I will be able to give you a definitive opinion on, you know, whether I think that we're bullish or bearish in the higher time frames. But until that happens, we're in no man's land, and I expect a lot of choppiness in the markets. Now, on the same accord that the dollar has been coming down for the past couple of days, you can still see that it's in a massive uptrend after just recently hitting a bullish price target. So I wouldn't be surprised if it does just chill out for a couple of days. You know, looking at our last fib, we back tested the 0.5 beautifully before the next leg to the upside. If we draw something like this, you can definitely see potentially another downtrend for the next couple of days. Maybe we'll go lower, maybe we'll go much lower in the next week or two, waiting for that next FOMC meeting, in which I do believe is going to bring strength back to the dollar and weakness back to the stock market. On the same accord that we said as well, the dollar or the stock market is going up on the daily. It's still very weak and stagnant right now, and if we do zoom out, you can see every single time we have one of these flips to the upside over on the squeeze momentum indicator since the 1st of April, they've been getting weaker and weaker and weaker with every bounce. So if we don't clear, you know, the previous levels at 418, or even, you know, worse, if we just come up, make something like a BART pattern before the FOMC meeting, and then we start coming down, this could definitely be brutal. You know, lower high from this squeeze momentum flip, lower high from this squeeze momentum flip. This was a very minor flip over here, so I won't be including this one. But, you know, from the last major flip over here, you can also see this is a lower high from here. And then previously, up before that, this was when we were uptrending. So this is why we're focusing on this region, because this is where the downtrend started to come into play. And I still think the stock market, once again, just like I said with Bitcoin, is likely to take a leg to the upside before a massive capitulation. We've also got the hidden bearish divergence still in effect. Now, the line of best fit, we will have to move. Once again, it doesn't necessarily matter if the trend line of the downtrending resistance is broken over on the hidden bearish divergence. It matters that this horizontal ray at 23,400, which was right here, where the hidden bearish divergence started to come into effect, gets invalidated. If that never happens, then expect another major move to the downside. You can also see that even though the price is coming up and is still double topping from our last run to the upside, the RSI is much more overextended. So this was previously at 48 and now it's coming all the way up to 57. So this hidden bearish divergence, you know, the longer and longer it plays out, the more time we spend not breaking to the upside of 23,400, then the stronger this divergence is going to get, the more overextended the RSI will be to the upside, and subsequently when this does play out, it's going to be very, very brutal. But on that same flip, you can see, you can definitely argue that we have broken to the upside temporarily of the bearish pennant. Now, you need to see continuation at this moment in time. There's no other way of saying it. If you do not very, very promptly break to the upside of 23,400, then you might just have this be a failed move equals a fast move in the opposite direction. If you remember, we highlighted this a couple of days ago, about a week or so ago in my videos, where we had a failed move to the downside of the bearish pennant. And then this is when we were saying, you know, a failed move equals a fast move in the opposite direction. We're likely to kick back to the upside for the next week or so. We reiterated that in our last video, pump before the dump. But nonetheless, a lot of things going on in the charts. We've already talked about the volume on this chart, but what I would like to say is if we do look at the volume and flip it on its head and talk about this in its bearish stance, the volume has genuinely been moving to the downside. Once again, drawing a line of best fit, you can see that bullish volume is exiting the market. The squeeze momentum indicator is absolutely flat and stagnating, and a lot of people think Bitcoin can take its time, lollygag, 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 slowly move up. That's really not the best case for Bitcoin. The longer we lollygag, the longer we consolidate around these levels, the stronger the hidden bearish divergence is going to play out, the more overextended things like the RSI are going to become. And while there is still retail money flowing into the market, you can see the money flow index is all the way up here. It topped out at around about 79. So it is literally on the verge of being completely overbought. When was the last time the money flow indicator was this overbought? We were all the way up here at 47,500. So definitely not looking too good right now. We're very, very overextended. And I mean, even in the immediate short term, the immediate move to the downside before a bounce over on the MFI was about a 45% drop from Bitcoin's price action. Now, am I saying that Bitcoin's going to move down another 45%? No, I don't think Bitcoin's going to immediately move down another 45%. In fact, I think round about the 14,000, which would be another 35% drop for Bitcoin, that's when we can start expecting our bear market lows. Until that happens, I would not be aggressively DCAing into the market at this moment in time. So, finishing things off, if we can also pull up the 200-week moving average, clear this chart up once again, you can see that we have been getting stuck underneath the 200-week moving average. And because this 200-week moving average is exponentially growing, why is it exponentially growing even though we're beneath it? This is a 200-week moving average. So this 200-week moving average is replacing data points from 200 weeks ago with price targets like 22,700. And you can imagine, you know, if we look back at 200 weeks ago where this started taking in data points, then this was all the way back around here at 6,600. So you can imagine the moving average is saying, hey, take away this price target from 200 weeks ago at 6,500, replace it with price targets up here at 21,000. So, you know, even if we come down to like 10,000 or 6,000, the 200 week is still going to be moving to the upside, because once again, it's taking in data points from ages ago. And subsequently, this is going to keep on getting harder and harder to get above week over week over week. With that being said though, you can currently see, you know, we broke into the 200 week, we lollygagged into it for a couple of days, we broke down, and ever since then, we've been trapped underneath it. And you can definitely see, even though there's not a lot of volume traded over on the VPVR, so if we discount the VPVR and simply look at what's going on the 200 week moving average, because it's clear that we're paying a lot more respect to the 200 week than we are with the volume profiles at this moment in time, we're struggling to get above this. There's not enough momentum coming in. There's not enough volume coming in. Sure, volume is looking pretty juicy over on the daily time frame, but it's still diminishing from a couple of days ago. And you should imagine that if Bitcoin is down at these levels, like 22,500, if this is the bear market low, you know, where are the people that are accumulating and potentially pushing this back up to the upside? So I don't want to be short-sighted and say that we definitely can't move above this, because once again, like I said, we are in no man's land until we have our next FOMC meeting. We only have another 9 to 10 days to wait collectively for both the FOMC meeting and the next GDP report. I honestly think if you wait for another 9 to 10 days and then the Fed backpedals, we're not in a recession, everything points for a bullish move back up to the upside. I don't think you'd be missing too much by just being patient and waiting another 9 to 10 days. If you have been watching my channel for a while, it has been very, very well documented that I have been bearish for months and months and months now. So waiting for another 9 days, worst case scenario, buying at around 23,000 Bitcoin if I no longer believe we're going to lower price targets. I'd much rather do that after we've got confirmation from the Fed, from the next GDP report. Until something like that happens, I would not be confident DCAing with large amounts of money. But once again, if you're new to the channel, I have been basically saying since 25,000, I've been buying in $1,000 increments. So it's not like I'm only waiting for my bearish price targets to hit and I'm never going to buy Bitcoin unless it goes down to there. Once again, it's been well documented on my channel: 25, 24, 23, 22, 21, 20, 19, 18, and didn't quite hit 17,000. All of these price targets in $1,000 increments, I have been buying every single one of these. So I will continue to buy to the downside. However, I am saving the largest amount of my capital for sub 16,500 Bitcoin. You also have to remember, make your own trading plan based on how your life is, how your finances are. I've been investing in Bitcoin since 2017. So if the bottom's in and we go to 100,000 tomorrow and I miss the DCA opportunities, my bags have been packed for years. If you're new to this market and you've only been here for a couple of months, then your strategy should obviously be a lot different than mine. Nonetheless, this is my strategy. I think we're going lower. I think in the next 9 to 10 days, the Fed is not going to backpedal. They're going to increase the interest rates. GDP is going to be negative. This is going to massively capitulate the markets. Pair this with the fact that the dollar is exponentially strong. The stock market is exponentially weak. We've got a hidden bearish divergence playing out. Even if we invalidate it and continue moving to the upside, that's just going to make the money flow indicator even more overextended. There's not volume coming in supporting this uptrend. We're in a plethora of bearish different technicals, and once again, we can be in anything from a bear flag to a rising wedge. All of these technicals are very, very bearish. And the only bullish things that we can talk about are, we're kind of moving to the upside on the squeeze one. We've cleared the VPVR range of resistance, but higher time frame bearish technicals like the 200-week moving average, like the bear flag, bearish pennant, rising wedge, hidden bearish divergence, all of these signals are still very, very prominent. And just looking at the MFI alone, this is a very worrying signal to me. So I'd be super, super cautious if you are heavily DCing and FOMOing into these markets right now. Once again, I'm not saying we can't move up to the upside. I'm saying this is no man's land for the next 9 to 10 days, and I wouldn't be heavily betting, shorting, longing in either direction. I think a lot of chop's going to be happening. I think, once again, just like we said on Saturday at 21,000, I think a move up to 23,200 is likely. Potentially a flush back down to the VPVR zones around about 21,000, potentially as low as 20,000, before maybe even another bounce up before the FOMC GDP results / meetings. It's going to be a choppy 10 days. Make sure you're patient. Obviously, do whatever you want. This is my trading plan. This is what I plan on doing. I'm sitting on the sidelines for the next 9 to 10 days, and just like I have been for the past couple of months, and it's been paying off wonderfully, I think this is another bull trap. We'll find out in the next 10 days after we have these meetings and these reports. That's all I've got for you today, my friend, and as always, Cowboy out. Peace.